Hey, beautiful people, it's Rickita, and I'm back with episode 156 of Credit 101. We're going to talk about how credit cards can impact your credit score. Now, a lot of people don't understand that your credit cards can help you and they can hurt you. So I want to go over, I think about 6 different things I want you all to look at and just make sure you're on top of to make sure that your credit cards are not affecting you in terms of when you're trying to go get your mortgage. It's actually helping you in a great way. So the first thing is you have to understand that when it comes down to credit cards, your credit cards they're going to affect your credit score. So your credit score is like the one of the most important things that they're looking at when they want to give you a mortgage. So your credit score is made up of different things though. And that the first thing is your credit utilization. I always tell people try to have their utilization at 5% or below. So keep that in mind. So your utilization is going to be very, very important. Also, your payment history. With your credit score, your payment history is going to be a big factor in that too. I think about 30% of your 30 to 35% of your actual FICO score. So that's why I tell people make sure you don't have any late payments. Set up auto pay on your credit cards, and then also when it come down to payment history, if you got any late payments on there, work to remove it. Literally on my website, I do have. If you go to Rickita.com, you will be able to see a late payment removal. I have letters for those. So definitely I suggest you remove those late payments if you have it. And then also your inquiries. So again, your credit score is made up of your inquiries, probably about a 10% of your credit score, but still, it's still a piece of it. So anytime you apply for credit cards, you're going to get that hard inquiry. So you want to understand that you want to have these 3 things in check when it come down to your credit score, so that when you have a chance to actually apply for a mortgage, you know your credit score is at its best. Now, the next thing is the debt to income ratio. This is going to be really huge, you all, when it comes down to the debt to income ratio. When you got any payments on your credit cards, they have to include that in your debt to income ratio. And your debt to income ratio is your monthly debt payments compared to your monthly income. And a lot of lenders want your debt to income ratio to be a certain percentage. Okay, so you guys want to make sure that when it comes out to your debt to income ratio, any type of payments that you have with your credit cards, if you probably got $100 balance on it and you just paying a minimum, which is about $25 per month, you may just want to pay like the full $100 balance on that, so that you can report a $0 monthly payment for that. So that payment is not including your debt to income ratio, because every monthly payment that you have, especially if it's reported in your credit report, they're going to include that into your debt to income ratio. And you don't want to have a lot of payments compared to how much income you have. You want to have as little payments as you can with a lot of income. That's what you want it to show as. So understand that your debt to income ratio is going to affect you. So I tell people, when it comes down to your credit cards, try to pay them all off if you can, because you can actually help with your debt to income ratio if you have them all paid off, or pay down the ones that's very, very close to just having no monthly payment. Because if you pay off a credit card, you don't have a monthly payment and you need to show 0. I don't care if it's $100. Well, think about it like this. You can have a $36 balance on an account and it can have a $25 monthly payment. They're going to count that $25 monthly payment, even though you could technically, I almost had a credit card paid off. So I tell people just to pay off the credit cards, especially if they have a very low balance, because you're almost there anyway. Okay. Now, also your credit history. The older your accounts, the better you are, the better your accounts are, basically. We want you to have a lot of length in your credit history. So the longer the history is, the better your credit score is. And don't forget, your credit score is affecting your mortgage. Also, having a diverse mix of different type of accounts too can help with this. But understand that your credit cards and your length of history can impact your credit score, which in turn could impact you actually getting your mortgage. Now, mortgage approval and terms, you have to think about your chances of actually getting approved. If you have a very low credit score, your chance of actually getting approved for a mortgage is very, very low. So that's why I tell people, try to have a very high credit score, a nice credit score, so that you can get approved. Your approval chances are higher. The lower your credit score, the higher the risks and they don't want to have a lot of risky borrowers. I can't even say that. They don't want to have a lot of risky borrowers. Okay, we also have interest rates too. So the lower your credit score is, the more you're going to pay in interest. When it come down to your interest rate, they're going to base this off your credit score. So you want to have a nice credit score so that you can have a lower interest rate. And again, your credit cards could affect this. Just having poor credit card management, having late payments on your credit, messing up your credit. Your credit cards affect your credit, which affect your mortgage approval odds, you guys. So having all those late payments, having high balances, all these different things can affect your overall approval odds. And then make sure that you are managing your credit cards before applying. So we already talked about utilization. So pay down your credit cards, okay? And then make sure you have some at a $0 monthly payment. You get them to report a $0 monthly payment before you apply for your mortgage, so they don't have to include that in your debt to income ratio. And then avoid new applications too. Don't get a lot of new inquiries. We talked about inquiries can affect your credit score, which could affect you getting approved for the mortgage. So make sure you avoid too many inquiries. And then two, having new accounts added to your credit reports is going to mess up your age, which can actually drop your credit score, lower your credit score. So keep that in mind. And then make sure you keep checking your credit reports to make sure you have no new errors or you're working to fix any old errors that you have. If you go to my website, Rickita.com, then you guys can be able to I have free dispute letters for you all to help remove any negative accounts. It's literally at the top, Rickita.com. I'll show you guys shortly, but this can help you guys remove any negative accounts that you do have. Okay. Now, after you secure your mortgage, it is some things that you have to do. I want you guys to maintain your good credit habits. Put all your bills on auto pay. Make sure you're paying on time and keep the balance low on it, and continue to check your credit to make sure everything is correct. You don't have any new negative accounts. I want you guys to continue to check. Hey, welcome to episode 157 of Credit 101. In this episode, we're going to talk about getting a mortgage after a short sale. So if you guys already had a short sale, you think about getting another mortgage, we're going to talk about the waiting periods. How long is it actually going to take for you guys to get a mortgage? So there's going to be different waiting periods depending on what you are going to actually do. So I want you guys to understand that it's different type of loans that you could take out. If you decide to take out like a conventional loan, typically you got to wait about 4 years after a short sale to qualify for a new conventional mortgage. You have to understand that there is some type of circumstances, which we're going to go over next, that can make these different periods actually be shorter. So we can go from 4 years to 2 years if you maintain good credit after getting your short sale and you had these different circumstances, which we're going to talk about. Another thing is for the FHA, usually you got to wait about 3 years. If you're trying to do a VA loan, you're looking at about 2 years. And in USDA, we're looking at about 3 years. Now, again, there's different circumstances that can make these numbers change. Okay, so we have to think about those different circumstances. So let's actually talk about a few of them. I'm talking divorce. If you guys had any like medical bills, you had like a lot of medical bills, you had basically a medical emergency, then they would consider actually thinking this as a circumstance where you don't have to wait 4 years. You can go down to 2 years. Or a job layoff. Say if you was laid off at work, these different things, they're going to look at it as different factors. Okay. Now, different other factors going to influence it also. What is your credit score? Is your credit score a lot higher? Have you been doing great? Have you not had any late payments since? You have to think about that. And then what about your financial situation right now? Do you have more money? Do you have money saved? How is your debt to income ratio? What debts do you have overall? All of these things are going to be considered. Now, there are some steps that you can take after a short sale, you guys. After a short sale, start rebuilding your credit. Save for your down payment. Work with a mortgage broker, because a mortgage broker can be able to tell you where you're at, because they look at your credit and tell you where you're at and what you need to do to be able to get your mortgage. And then they also, when you're able to actually apply for mortgage, or when you're ready, they can actually send your mortgage application to multiple banks and lenders. So I definitely like that. And then it can help you review your finances and review your budget too. Now, understand that this is going to, a short sale is going to impact your future, but all you have to do is just make sure that you're staying on top of everything now. Yeah, you had a situation in the past. You know that you need to work on your credit. You need to make sure your money is together, and you just have to wait whatever that time frame is, and you should be able to get that mortgage that you want. But hopefully you guys found these tips helpful. And again, make sure you talk to a mortgage broker, because I like those better, because there's so many different companies they can shop you out to. They can be able to help you find a mortgage better than going to a direct bank, because a direct bank can only give you what they have. A mortgage broker, they can send you to that bank plus other ones, 30 other ones. So definitely look into a mortgage broker.